to you about is how we work together in the face of some of the massive environmental challenges that we're facing today, and to use one example to work through a process of working together. And when I talk about environmental challenges, I don't only mean it in a narrow sense of environmental challenges. I refer to that as well as in the light of the social challenges, the economic challenges, and the governance challenges that we're facing. I think all of us, the farm worker strikes we've seen around us very recently, price volatility in food, all these things which emanate out of how we interact with our natural systems. So I refer to the process of how we work together. And I want to refer specifically to the insurance industry and a case study we've done recently with the insurance industry to illustrate some of these points. So I start off by just talking about how we work together. And I want to speak quickly about the topic of social responsibility, sustainability, and shared value. Now, this guy at the top there, this rather pensive-looking guy, Milton Friedman, the economists in the audience will know him very well, a fierce defender of the free market. And he came up with this saying early on in the 1970s, and he said, "The business of business is business." This really made him the pariah of the defenders of social responsibility. I think there's something to work with there, and I think what he was getting at is that corporate social responsibility, as it was put forward in those times, pits society against business and business against society, and not seeing business and the way that we do business and the way that we run our economies as potentially a positive force. Fast forwarding on to 2011, we get this guy Michael Porter, and the business people in the audience will also know Michael Porter. Spent his life working on competitive advantage and how do businesses compete better in the business environment. And he came across this concept in the 2010, 2011, this concept of shared value creation, where he said that the best way you can compete in this business world today is by creating or improving the pool of value that you participate in. So improve the pool of value that you are participating in, and then participate and benefit from that value. And he sees society as participants in the process of joint value creation. So don't see stakeholders as something that is threatening society, civil society as a threatening force, but see them as participants in this process of value creation. So these were all very insightful thoughts and so forth, but I couldn't help thinking to myself, or the words of that Vodacom advert were ringing in my mind, that one, "We've been having it." Because when I thought about what they were trying to say, really these are it's the philosophical base of Ubuntu, where it refers to the relational aspects of human beings. And this is really what Michael Porter was saying in his shared value creation concept, was that businesses need to see this relational aspect of their business, that a business is nothing more than a bunch of relationships between its customers, relationships with its stakeholders, relationships with its employees. It's a bunch of relationships. A business is no more than or less than that. And I think this is encaptured in the spirit of Ubuntu. And I think when Nelson Mandela was queried on the topic of Ubuntu, he had some insightful words to say. He said that Ubuntu does not mean that people should not enrich themselves. The question is, are you going to do so in order to enable the community around you to be able to improve? So this is, to me, almost exactly what Michael Porter was saying, and managed to get a publication in Harvard Business Review. This is really something that I think is in our culture and our philosophy in Africa. So I'm asking the question to myself, have we lost our way in terms of the way we're looking at sustainability, the way that we're looking at social responsibility? Are we focused too much on being less bad? If I look around and I see the way that many of us are approaching sustainability, it's about looking less bad than your neighbor and trying to look better than your neighbor. Well, I'm afraid the types of environmental challenges that we're facing today, less bad is simply not going to be good enough. We need to find ways of reinventing, looking at our businesses that they are a positive force within society as opposed to a less bad force within society. And this is really the topic that I want to speak to you about. And, there's so much complexity in this sustainability world as well. And I'm reminded of this remark by D. Hock, great systems thinker. And he said, a simple, clear purpose and principle gives rise to complex and intelligent behavior. You can read innovative behavior there. But complex rules and regulations give rise to simple and stupid behavior. And we see this. Massive standards, massive reporting requirements, tick box mentality driving, I believe, many of us to what is very superficial and stupid behavior, as opposed to really looking deep inside our businesses, the way we do business, the way we interact with civil society, and looking for that real transformational change that's required to meet some of these big environmental challenges we're facing. So with that in mind, I want to move on then to the insurance industry. And this is by no means a complete story. This is a start of a journey, but I think one which is insightful, a case study that we can look at in terms of how do we approach this. And this is some work that I've done with colleagues in Santam, as well as with UCT and the CSIR. And so the story of insurance is this one. And Simon passed me a lovely article just as we were sitting down here this morning that speaks more to this. But the story of insurance. This is the global reinsurance figures. The yellow line represents a moving average of natural disasters. So how much reinsurance is paying out for natural disasters. The red line at the bottom is what is paid out for man-made disasters. The blue line is the real data. So you'll see the spike in 2006, I think it was, Hurricane Katrina. I've only got data up to 2010. 2011 was 70 billion was paid out. We already know Hurricane Sandy this year is 30 billion on just one event on its own. So this graph is, this is real and it's getting worse. What's interesting for us is that in 1988, you see a divergence of the red line and the yellow line. So the man-made disasters and the natural disasters moving apart. So suddenly we're seeing this massive increase and this trend of increasing natural disasters globally. And this is obviously of considerable concern to the global insurance industry. And, this is a real fact. We live in times of unprecedented risk. This is what's driving that trend. We are seeing a massive increase in the number of these natural disasters. And there are three main reasons why we're seeing this increase in natural disasters, the increase of impacts of those natural disasters as well. Firstly, quite obviously, there's an increase in exposure. More urbanization, more people living in more concentrated places. So when a storm comes through, it takes out a lot of infrastructure. That's the first reason that we need to realize that our process of urbanization globally is placing us at risk from that aspect. The second is there's a definite increase in the volatility of the system. And we've measured this. We are seeing more storms. We are seeing more intense rainfall events. And this is increasing our risk. The third one, which is an interesting one, and one which ties it back to our business as WWF, as stewards of the ecological system, and that's a decrease in the ecological buffering capacity. So Morna has already shown you this trend. In the late 1980s, we see this Living Planet Index starting to move downwards as we impact on the buffering capacity of the ecological system. And very interestingly, and this might be a little bit of a messy overlay, but it's almost at the exact same time that we see this increase in global reinsurance having to pay out to natural disasters. So call it a correlation, call it coincidence, I don't know, but certainly there's something happening there. And so let's work through this quickly, and I just want to illustrate to you. This is a map of global land use changes, and we're starting at 1,000 years before present, and I'm going to quickly run through that. The green bits of the Earth show you the untransformed bits of the Earth. As you move into red, the red is almost 100% transformed land, and then the yellow is in between. So we move through this 1,000 years before. Very interesting. India, pretty well transformed. That's the Ganges River Valley you see up there. Intense agriculture happening 1,000 years ago. Some of the Mayan culture you can see up there in Central America. Very interesting. We move on to 100 years before present. We see China developing. We see Europe developing rapidly, and some activity in Africa. 60 years before present, Europe pretty well developed. The East, not a little bit happening in Southern Africa, not a lot. Interesting, Australia almost untouched. The Midwest of the U.S., pretty much still intact. And then from 60 years before present, we see this massive change. This was after the war, of the last century, the Second World War. And we see a massive increase in Southern Africa, the Midwest of the US, and Australia development. That's present-day transformation. 20 years forward, that's what it's likely to look at. So the point is here, we cannot expect this planet, the way it's looking here, to act the way it has acted before. And now, interestingly, if you look at insurance, most of their models are developed on 50-year events, 1 in 50-year events. So they're modeling on a world that looks like that, but in actual fact, the world is looking like that. So this is a really, throwing their models out completely. So how do they deal with this change? Quick word on ecological buffering capacity. I've used it and maybe not defined exactly what I mean by it. When we plan a landscape properly and we keep the ecological systems intact, what it does, it buffers us against these extreme events. And specifically here, I've used hydrological flows and flooding as an example. Basically, these systems slow down water and release water slowly into systems. When you harden these surfaces through agriculture or through urbanization, what you get is water hitting the ground, shooting off very quickly, and you get the flash flood phenomenon. So you're changing the rate that water moves through the system radically and exposing yourself to flooding. So we had all of this in the back of our minds, and we said, well, let's go and test this. Let's go into the Southern Cape. We know the Southern Cape is an area where we have massive flooding events. We have these cut-off flow events. Let's go and have a look at how it plays out in the Southern Cape. So the bottom corner here is a graph of Santam's claims in that area, and you can see once again emulating that global trend, massive increase in the 2000s in terms of what Santam has had to pay out in that area due to these massive storms that come through. This is a picture of Sedgefield, and so if you've got a holiday home in this area, this is the part where you go and pour some tea or go to the... It's not going to get any better from now. So these are the findings of our study. First of all, climate change will increase risk in this area. It has increased risk, and it will increase risk into the future. So we looked at observed data of intense events, and we looked at model data into the future. We saw a 40% increase in fire risk days, high fire risk days. We saw a 40% increase in extreme rainfall events, and we saw a 6 times increase in the frequency of big wave run-up along the coastline, which could erode the coastline. These are the sorts of changes we're seeing as a result of the impacts we're having on the climate systems. So this is all scary stuff. The second finding was, as an ecologist, the most interesting one for me, was that the current impacts we're having on those ecological systems is having an equal or greater effect on risk. So first of all, if we look at land use, the land use changes that had happened in that area had an equal effect on flood risks. So big fires going through massive pine plantations had a huge impact on the runoff. Secondly, alien invasive trees was the greatest driver of fire risk in that area. And thirdly, the destruction of coastal foredunes was the greatest predictor of sea storm damage in that area. So these are things that we're doing right now, things that we're impacting on the ecosystem right now that is having an impact on the risk in that area. So to me, that was very interesting. So the conclusions that we came out of this study was 2, and they're pretty philosophical conclusions. I found that, and this is what we spoke to Santam about. We said, the world is more complex than you think. You were just modeling events, flood events over the last 50 years. You said, well, we had 3 flood events, so we'll have 3 in the next year, and this is how we determine our premiums. A little bit more complex than that, but I'm simplifying it for illustrative means. But actually, the world is far more complex. There's things happening in the world that you don't know about that are impacting your risk that you should know about. So the world is far more complex than you thought it was. The second message is a positive message. You have more power than you thought you had. And I'll work through that quickly. So first of all, that the world is more complex than you thought it was. This is a map, a systems map of some of the things that cause risk. And I don't intend you to have a look at it, to understand every detail of it. But pretty complex. There's a lot of things that are influencing their risk. However, when you look at a systems map like this, you're able to identify the key controllable drivers of risk within that map. There's things that you can't do anything about, but there are things that you can do. And within that map, you can identify, okay, these are the things where we can influence. So we've identified key levers in the system where they can intervene. And secondly, you have more power than you think. If we model this back from the key hazards that they were concerned about, we say, well, the key controllable drivers that influence fire, flood, and sea storm are alien invasive trees, land use planning, health of ford dunes. So we've identified key controllable drivers. Working back from that, we can then identify who are the key influencers of those drivers. And finally, we can then understand how can we interact with the key influences of the drivers of risk. So by taking a systems view of the world and understanding the complexity in the world, you're able to distill the simplicity that you need to intervene. And taking that further now, we said, okay, well, you know now which stakeholders you need to work with, but how do you work with them? So we developed the stakeholder map, and we said the key criteria we believe in determining how stakeholders behave are three things. Power. Do they have power to influence things? Secondly, do they have a motive? Do they have a reason to work with you? And thirdly, are they connected? Can they connect to others who maybe have power to influence things? So when you start mapping your stakeholders on this, you start understanding how you can work with them. It's interesting that, so for instance, if we take local authorities have power. They can influence land use planning. They also have motive, both negative and positive motive. More development means more rates, which means a more wealthy municipality. So they might approve developments which are not appropriate. So that makes them a dangerous stakeholder because they've got power, they've got motive, but you've got no connection with them. They're out there. There's this stumbling giant doing things that you have no connection or influence over. So clearly, if you want them to become a definitive stakeholder, you need to move them into a more connected environment. So you need to work on connectedness. If you take customers, you connected with them, they've got a motive. Nobody wants to get flooded, but they've got no power. So if you want to work with your customers and your clients, the key here is to improve their power. How do you make them act as more as a cohesive so they have more power and influence in the system? And finally, conservation agencies, a lot of power, very little motive to work on these economic issues, these social issues. Many of them have got a biodiversity mandate. That's it. They're looking after biodiversity. So you need to give them motive and you need to improve their connectedness. So this is once again starting to give us the levers of how we engage in that system. But finally, and I love this quote, Mike Tyson, one of those great complexity theorists of our time. I mean, really, this is deep. You don't think it's deep. But he says, everybody has a plan until you get punched in the mouth. I think Colin Powell said it as well. A battle plan never survives the first bullet being fired in a war situation. And that's very true, is that, you can have a great plan, but don't rely on the master plan. Rather invest in the self-organizing capability of systems as opposed to try and develop this massive master plan that's going to change the world. So hats off to Mike's insightful remarks. So in conclusion then, what have we learned out of this process and how does it inform our thinking going forward? I think the first thing is really understand your motives, and this sometimes relates to risks. And I'm often reminded, every time I fly in an airplane, which is too often given the nature of our business, but when the safety briefing comes on, it says, please put on your own oxygen mask before trying to help others. And now clearly that's very sensible advice. If you start helping others before you've helped yourself, well, you're dead and you don't get to help them. So, you need to understand your own motives very clearly, I think, and the risks to your business. And I think this is what we did with the insurance industry. Secondly is really identify the leverage points for shared value creation. Those places where you're going to, as a business, become more resilient, but also invest in the resilience of society. And finally, the point that Mike Tyson made so eloquently, invest in a way that enhances the self-organizing capability of civil society, as opposed to trying to create the master plan from the top. And I think ultimately that is what we're about. You know, if we can do that, we have a chance of giving life to this vision which was sketched out in the Deniking scenarios of an engaged citizenry. If we can work with each of us within our networks to mobilize our networks to become more engaged and influence their power around the things that we care about, we'll have a chance of meeting some of these large environmental challenges that we're facing. So thank you very much for your attention.